You know, you work hard, you're bringing in a great salary, but then you look at your bank account at the end of the month and you're just left asking this one simple, really frustrating question. You know you're making good money, so where is it all going? Well, if that question hits home, you are so not alone. This number, over 50%, this is the percentage of Americans earning more than $100,000 a year who are still living paycheck to paycheck. This isn't just some random statistic. It's a huge red flag that our default way of managing money is, frankly, broken, even for people who are supposed to be doing well.
So how do we fix this? The answer isn't about earning more or, cutting out every little joy in your life. It's about implementing a professional system. In this explainer, we're going to walk you through exactly how to rebuild your financial life from the ground up, not with some motivational fluff, but with the actual operational playbook of a chief financial officer. We're going to cover 5 critical steps. First, we'll diagnose where your money is really going. Second, we'll hack the psychological biases that are holding you back. Third, we're going to build an automated architecture for your money. Fourth, we'll dive into how to use debt as a tool, not a trap. And finally, we'll put it all together to build your own personal wealth engine. All right, let's dive into Section 1, diagnosing your cash flow. It's time to stop just reacting to your finances and start running them like a business. And you know what every good business does first? A thorough audit to find the leaks. And here's the absolute truth. You cannot manage what you do not measure. The real foundation of wealth isn't some secret stock tip. It's knowing, down to the dollar, where your resources are flowing. This is all about gaining total, undeniable clarity. And to get that clarity, you've got to track everything, at least for a month or two, and sort it correctly. Look, there are really only 3 buckets your money can go into. You've got your essential costs, the non-negotiables like rent. Then there's elastic spending. This is where you have choices like dining out. But here's the most important one, capital flow. This is the money that's actually working to build your net worth. The whole game is to shrink that elastic bucket to grow your capital flow. And that leads to a huge mindset shift. Please forget the idea that budgeting is about restriction. It is not. It's about being strategic. It's about you acting as the CFO of your own life, deciding where to allocate your capital to get the best possible return. And that return? A life of financial freedom. That mindset is everything, and it brings us right into Section 2, hacking your financial behavior. Because look, knowing where your money goes is one thing. Actually controlling its direction against our own worst instincts, that's a whole other ballgame. This is where we use psychology to our advantage. Just look at the difference here. The column on the left, that's reactive. It's probably familiar. You earn, you spend, and you kind of hope there's something left to save. The wealthy approach, on the right, totally flips the script. The very first move after getting paid is to automatically invest. You pay yourself first. Then you automate your bills. And then you design your lifestyle around what's left. It's a proactive system, not a reactive hope. So how do they actually stick to this? With 3 powerful hacks. First, automation isn't a nice to have. It is mandatory. This takes willpower completely out of the equation. Second, they make powerful one-time choices, like deciding once to max out their 401k that pay off forever. And third, they use a cool trick called mental accounting. I mean, think about it. If you name an account Freedom Fund, you're way less likely to rate it for a new gadget than if it's just called Savings Account 2. Which leads us perfectly into Section 3, architecting your financial system. Okay, we've talked about the what and the why. Now let's build the how. This is all about creating the actual infrastructure that makes all those good behaviors happen on autopilot. This is the blueprint right here, and it is beautifully simple. Think of it like a series of pipes. All your income flows into one central income account. From there, automated transfers shoot a fixed amount to your operating account to handle all the bills, and another fixed amount to your growth account to fund your investments. What's left over, plus a little buffer account for surprises, is all yours to live on, completely guilt-free. This system just removes the guesswork and the stress. All right, let's talk about something that makes most people a little nervous. Debt. In Section 4, we're going to reframe this completely. See, most people view debt as a trap. The wealthy see it as a tool. The whole key is understanding how to use it for leverage, not for lifestyle. This slide lays out the 2 different worlds of debt. On the left, you've got debt for consumption.
using credit cards for vacations, or getting a loan for a fancy car. This is a liability. It actively drains your wealth every single month. But on the right, you have debt for acceleration. This is when you strategically borrow to buy an asset, like a rental property, that's going to generate more money than the debt costs. One makes you poor, the other can make you richer. And here are two perfect examples. You could use a home equity line of credit, a HELOC, not for a fancy kitchen, but to buy a cash-flowing rental unit. Or you could use a securities-backed loan to get cash when you need it without having to sell your stocks and trigger a massive tax bill. The bottom line is this: if the debt isn't buying you an asset, it's buying you a problem. Okay, we've diagnosed our cash flow, we've hacked our behavior, we've built our system, and we've reframed debt. Now for the final, most exciting piece of the puzzle in Section 5, building your wealth engine. This is where we really make our money start working for us. You do not need a PhD in finance to build serious wealth. This chart shows a simple, incredibly robust portfolio. The huge majority, like 60 to 80%, goes into simple, low-cost index funds that just track the whole market. Then a smaller slice goes into things that don't always move with the stock market, like real estate investment trusts, which adds some stability. And then only a tiny fraction can be used for more speculative opportunities if you want. The core of it is stable, it's boring, and it is so effective. And the process itself is just as disciplined. First, you have to prioritize your tax-advantaged accounts, your 401k, Roth IRA, HSA, before anything else. It's basically free money from a tax perspective, so you grab it. Second, automate your investments. Making small, regular contributions, that's a strategy called dollar cost averaging. It takes all the emotion and the stress of trying to time the market out of the picture. Finally, just check in maybe once a quarter to rebalance and make sure everything is still aligned with your long-term goals. So let's bring this all home. What's the takeaway from all of this? It all starts with getting ruthlessly honest about your numbers. You have to track your cash flow with the precision of a CFO. Then, you build a system that protects you from yourself. You have to use automation to make the smart choice the easy choice, just like a behavioral economist would design it. Third, you need that clear, simple structure for your money to flow through. You've got to design your financial architecture with the foresight and discipline of a professional portfolio manager. Fourth, it's time to completely change your relationship with debt. Stop using it to consume and start seeing it as a powerful tool to accelerate your wealth, the way a savvy, leveraged investor does. And finally, you have to commit to playing the long game. That means investing with a disciplined, proven strategy with the kind of patience and stability you'd see from a multi-billion-dollar endowment fund. Because here's the ultimate truth. Financial freedom is not a lottery ticket. It is not something that happens by accident or by luck. The people who achieve it, the people who build real, lasting wealth, they get there because they designed a system to make it inevitable. And now you have the blueprint to design your own.